Welcome to Crypto Consciousness. David here. I want to take you through today some cool little administrational sides to our crypto world. It's important to stay on top of your accounting, and as an investor or a trader, you really need to know where you stand come tax time at the end of each financial year, what you owe or what deductions you will get reimbursed and so on. So it's important to have an accountant who will do your accounts every year if you're into that sort of thing. If you're not, you can seek somebody. But in this case, I want to show you how to be independent and how to basically record all your purchases and sales and how to do it in a way that you know what to give to your accountant. Now, none of this is financial advice, can't be classified as it. It's just basically what I know to be true and what I've experienced, and hopefully you can learn a lot from it and get on top of your accounting. So let's get into this. Do me a favor though, if you do like it and you're happy to hear about this, hit like on YouTube. You know the drill. If you haven't got a premium account in YouTube, do consider it, because that way you can save your videos, you can have records of what you like and don't like, and also enables you to comment on videos. And comments are good because if you can put comments down below on anything that you want to know more about, put it at the bottom of the video. That way I can answer your questions and get it really interactive with you. Anyway, let's move on. So we've got here is a spreadsheet I've created just for the purpose of this video. I'm using Excel, and as you can see in Excel, if I don't give enough space to a number or a word, it just does this hashing. So all you have to do is highlight your mouse on top of that little line that breaks it up. Once you get that shape, you pull it out and open it till you've got enough room. Now make sure you put the font the size that works for you, and you just do that at the top here by selecting what number. This is on size 14, so let's go a little bit bigger just for the purpose maybe of this video, if it doesn't blow it out too much. So let's go 18. Okay, so this is going to make it a little bit more a little bit big, but that's okay. So we'll just open it up a bit more. Okay, so actually we will undo that. Just keep it that size there. Hopefully you can see. Cool. Now, first things first, we need to understand in Australia here we have our capital gains tax, and to know what you need to pay, I've just written this up here. If you hold a position, so if you're buying a crypto and you've sold it within 12 months, so let's say you bought it last week and you sold it this week, that's obviously less than 12 months that you've held the position. If it's in profit, you're looking at paying 35% of the profit to the tax department. If you hold the same position and you only sell it next year around this time, after means you've held it for over 12 months, that means your percentage is only 15% tax. So it comes from 35 to 15%. So that's why they're encouraging long-term investors rather than short-term investors. But see, the logic is if you can turn over double your money in a few weeks or a few months, if your position and project starts to take off, and you close it and take some profit, then great. You know, you can do that again every few months. Then you're in profit more than you would if you held it. But a lot of people make a lot of money, and I'll just pull up the chart if I can find it, just by holding a position. In my last video, I did explain this and show this, but this is Chainlink. I can show you this example rather than Ethereum. You know, I think where would I get back in on this position was in the 2019-ish. So around the dollar mark. So around down here somewhere. You know, it pumped, it went up $5, great, sold some out, went back down, bought some in, then it was a long ride, then we eventually went out a little bit out, and then boom, straight back down to $3. So if you were selling the tops and buying the lows, you'd be in profit a few times here. So once, maybe twice, maybe 3 times, and then you would have cried because it sort of had a tankage there when COVID kicked in. But that's okay. You would have known to have bought that cheap because it was so low. Anyone in my consults knows what I like to do in my buying strategy. Well, I've one of them anyway. Anyway, so you bought back in here, and then you watched it go from $5 or $3 up to 20 something dollars, $26, and then it did the same thing. It pulled back, it had a chop and change direction for a while, and then it climbed up, and it climbed up, and then boom, same thing, went back down. Now, just looking at this, if you had bought down here like I did, and you just holding it until today, you still be in significant profit. So $36 from around the $1 mark. That's a 36x. That's 3,600 hang on, no, it's 36,000%, I believe, or 3,600%, one of those. But if you'd been smart and you looked at the top there, if you were lucky enough to get around the top, you would have had even double that. So, 60, 70x on a return multiple is a really good investment. So you should be doing some sort of strategy where you're taking profit along the way. So we're going to do that and talk about that now. So this video will be about how to manage your accounting, but also when to sell a position. If you're not sure, make some decisions before you get into trading. So one of the things I've learned in my trading career is, you need to make decisions before the event occurs, because then you're not emotional about it and you stick to your guns. You don't have to think about it. Once the price triggers, you're happy you got a profit. You're not crying because you've missed that opportunity. A lot of people are stuck in the past where they're always like, oh, I could have done this, I should have done that, I should have done this. But you know what? That's in the past. There's nothing you can do. So even talking about it is a waste of time. So what I want to do is encourage people to not have to go through wasting time talking about the past. Let's sort of go, all right, well, what's my plan? What's my strategy? That's the one I want to execute. And when it does, I'm happy. So what I've got here, I'll increase the size. There we go. So here, this is what I do. I go, once I buy a position, let's call it theta, on the 1st of January, I bought 1,000 at $2. The cost was $2,000. So all I have to do to figure that out, for those who don't know how to use Excel, we go we hit equal, and you'll click the amount that you purchased, and you're going to create a sum here. So what I'm doing is on a Mac, I'm clicking Shift plus, and then I'm clicking the price that I bought it for, and then I hit return, and that gives me the price that I spent. So 1,000 times $2 should give me 2,000. So I'm not sure why that's doing that. Let's try that again. Equals 1,000 multiplied by, should have been a multiplication, and there we go. That's better. I'm not sure what happened there, but it's fine. Okay, so technically it cost us $2,000 for the 1,000 thetas, and then there was a fee of $20, which is a 1% brokerage fee, which is quite reasonable for CoinSpot. And then that meant we spent $2,020, right? So here is where people kind of get confused to do their maths. But it's important to sort of note this, because come tax time, you want to deduct the expense side of things. And in this case, the fee was $20, right? So what you do is you work out the cost per coin with the fee included. Now, CoinSpot's great because they give you a file you can download, which will give you the pre-cost and with fee and without fee. So here, what I want to do, I want to divide. I want to do a sum, which on Excel I do equals, and I do the total cost, which includes the fees, divided by the amount of theta tokens I acquired. You hit return. That means you spent $2.02 per token. Great, and we need to know that later on. So why we need to know that? Because we're going to take profits now. So I'm going to say to myself, I've got a strategy here, which is I'm going to, I'll be happy to take some profit once I've got 100% profit. So that means once I double my position, so once $2,020 goes to $4,040, I'm going to take my first bit of profit. How much profit? Well, here's the strategy. You're going to take 50% out. Why? Because if you've put $2,000 in and it goes to $4,000 and you take out 50% of that capital, the holdings, that means you got all your initial capital back, which was your cost. And then the rest is icing on the cake. So you got another 50%, which will be, in a sense, I wouldn't call it free money because you did work for it and you did take the risk for it. So it's not free money at all. It is the return on your investment, but it's the icing on the cake. Once you got your returns, then you get to enjoy wherever it takes you from there. Same thing is true, which is the opposite is true when you're at the loss of 100%. So there's no guarantees in crypto or in any investing. So if that $2,000 could go down to $1,000, could go down to $20, and some people do lose that on some high risky investments. So we want to be smart. We want to choose good projects, solid projects, good teams, verifiable Telegram accounts with Instagram, not necessarily Instagram, but Twitter and Telegram. Telegram, if a cryptocurrency doesn't have a Telegram account, you shouldn't be dealing with them because they don't have enough people on their team, and it's probably not a big enough project to validate the resources. So you want to make sure you can send them an email to support and get a response within 2 business days. and that validates that there's at least an open communication. So if anything ever goes wrong, you can obviously talk to someone about it. Like, we know many scams that happen. Most of us all been scammed at some point, or at least come across one. And this morning I had a consult where the scam, well, it seems to be a scam because, significant money was invested, communications is down, and we don't have a Telegram group, and a lot of money was put into the account, but then we were never actually verified a wallet to take money out, only a wallet to put money in, and that is a sign that somebody's being scammed. So don't be caught up in those things. Always make sure you can find them on, let's say, CoinGecko. Let's go. So you should always be able to go to CoinGecko and type in whatever project you're looking at. So, let's say Made is the project, then it should come up here. You should be able to see a Facebook group, a Telegram group, maybe a Twitter. Definitely see their website, see their circulating supply, check out their daily trading volume. So something's only got $1. It's not very tradable. No one's really trading it. So is it worth an investment? Probably not. Here, at least you got $2.5 million and the market cap's $300 million. So that's a significant amount of money. They seem to be valid, but their charts are here. You want to hit max and see what has happened in the price action of the lifespan of the token. Over here, you've got some details. You can have a look and read when their highest price was or their lowest price, where they rank in the crypto charts. So there should be data on them. If there's no data, don't get involved. Just walk away. All right, where were we? Okay, so we're going to set take profits now. So I'm going to go into CoinSpot when I want to hit these take profits. So what I want to do, take profit at 100% profit means at $4.04, that will give me my 50% initial capital, and will give me 50% to play with as profit. Then over here, what I can do is I can go, if you're not sure and you just want to know what your percentages are, all you do is you set your percentages. That's what you'd be happy with. Over here, you then go equals, and you go, okay, well, the price per token multiplied by, we'll call it 600%, because you need to factor in the first 100%, which is your initial cost. So that means at 500% profit is after your initial 100% capital is invested, means it's a total 600% of your initial cost. Right? Hopefully that makes sense, but don't get too caught up in it. It just means 500% profit is at $12.12 if your cost price was $2.02. Then obviously from here, we can do the same thing. Cost price multiplied by 11, because our first that 11th is the first 100%, which is our cost price, and then the extra 10x is its value times 11, which gives us $22.22, a master number. Brilliant. Okay, so what the strategy we said was 50% would get our initial capital back, and then the rest is icing on the cake. From there, once we hit our 500%, we're going to sell the remainder 25% of the position, which in this case will be 50% of what remains. Okay, I don't want to get too bogged down with those with those percentages, but basically we want to sell 50% of what remains in the account at that 500% profit. So then when we hit so let's take profit 2. When we hit take profit 3 at a 10x, that's at $22.22, and we close the remainder 25% of the initial investment. So now we've closed the complete position, and we should have, let's now merge these figures in here. Sorry, cancel that. I'll pull these out from over there, put that there, open that up because it's not fitting. Let's go a little bit more. Geez, it's big. What's going on? There we go. All right, so here we are. Let's continue on with this spreadsheet. So then we decide to the take profit gets triggered at once theta hits the $4.04. We close 500 because 50% of our initial position of 1,000 tokens, this 1,000 here, is 500, right? So we've got our 500 tokens multiplied by the price target and that gives us a value. If we do equals the price multiplied by the amount that we're selling on that date, and that was 2,200. Now that's the value, but we have to remember there was a fee involved, and in CoinSpot it will show you that. So you'll only get $2,000 rather than 2,200. So this is where the automatic deduction of the fees gets factored in for an accountant. So you really, check with them, but obviously they might want you to just give them a spreadsheet, but obviously it costs money to do all this stuff. So if you can just be on top of it yourself and then hand them the final result, I'm sure they'd appreciate the time saving as well, and you'd save potentially on the fees. So here we've got, after the fees, it's $2,000. Great. Now from here, what we can do is work out what our profit and losses are and how much we're going to have to pay. So in this case, it's all self-explanable once you know what your headings are. In this case, after the fees, we got $2,000 back, which means we can work out our profit and loss. So we go equals, and we work out what we got in our bank or our CoinSpot deposit account once we sold off and the fees were deducted. Plus, so we've got 2,000 in this situation. And then, actually, one more thing before we do that, we need to work out what our initial cost on the 500 was. So we go equals 500 multiplied by the initial cost of $2.02 and hit enter. That means it cost us $1,010 for the 500 of them. And now we're going to, which now we've sold for $4.04, which gave us a value of $220, and minus the fee, we got back $2,000. So we're going to hit enter on the profit and loss. What money we got back is our final result minus our initial investment, which was $1,010. Hit enter, and our profit is $9,900. So, maybe we want to definitely I would put the price a little bit higher to factor in the capital gains. Rather than just doubling my money, I want to make sure I cover that. So I'd be looking more at probably even $4.50 might be a better price target. Right, getting closer, maybe $4.70. Yeah, so that 350 tax. So yeah, you want to be, if you really, really want to get to this point, it's up to you. But for the simplicity of maths, I'm doing this example whereby we're just trying to keep it simple whole numbers, in a sense where the percentage stays whole and you just work off the initial cost. But in this case, for my own personal enjoyment, I would want to make sure that I factor in covering the tax component. But all right, for this case, let's just keep it simple and go with what is. So David, just chill. All right. All right, so here we go. We got $4.04. That's our price. Profit and loss is $990. Therefore, we want to, if those who can't see the formula at the top there, it is the S5, which is the profit, multiplied by 35%. And the way you just do that is you hit that tax column, hit equals, and you click on the profit, and you then hit, I do shift multiply, and then I do 35 and I put a percent in there, and it actually works out that out of that $990, I've got to pay $346.50 because it was within 12 months. Now, if that, I'll just move this column across, which means I'll walk away with that minus that equals $643.50. So you can see when something's 100%, you're not exactly getting double your money after you take out your tax and your fees. It's not exactly, it's out a little bit. That's why I'm saying the more advanced version is actually factoring that into your take profit prices. So they're much higher, that will then factor in a better coverage. So then you do technically get double your position in returns, making it more worthwhile. But obviously that's a little bit more advanced. So this is really designed for people who are sort of beginner, intermediate, haven't done or even advanced, who haven't done their own accounting and tax. This could be really useful for everybody in that area. So in this case here, you've got $643 on a $2,000 investment, and you've still got all this profit to take out. You've still got 50% of the position. Now, what I would be looking at here is just leaving that and going to the next formula, working out, okay, well, at $12.12, not sure why, but it's not working properly. That's strange. Okay, $12. That's bizarre. Okay. So the next take profit, we've set a price of $12. Sorry, technical issues there, but we hopefully got on top of that. Now, in this case here, we are wanting to work it out. So we don't want to have to sit there typing all the time. So what we want to do in this case, we've got a formula here, which is N5, which is this cost price multiplied by the quantity that we're selling. Now, all we have to do here, Excel is so good that you can just literally drag that formula, that screen down, and it should N6 okay. So this part here, what I want to do is make it a bit quicker. You click on this equals and highlight the take profit price, boom, and then that one there, same thing, equals that price there. And what it's done is it's just programmed that cell to have the price represented. Same thing with this. In case I want to change my take profit, it'll automatically work out the sums over here. So if you want to align those up, what I recommend is just going in here and doing currencies. So you do $, and it programs all these columns to be in dollars. You can do that with all the others as well. Just want to get rid of that line. No borders, boom. Okay, so here, now we should be able to do this, hopefully. No, it still didn't work. Okay, so this will equal 250 multiplied by that price equals, and then let's see if that works now. If I drag, get rid of that. If I drag that down, it should update for the following line, and it done. So, okay, so $22.22 multiplied by 250 Theta tokens gives you $5,550. Okay, so this is why I have actually used the wrong column here, but we'll fix that up in a second. So they're the values if we were to sell at those prices. So that's really what needs to be over this side here, and boom, and that side there, which clear content. Okay, so actually what I needed to do was get you the cost price, which is over here, 2 multiplied by the quantity if we hit that target. So we're just trying to work out the initial cost, because you'll need that for the equation. So then you'll hit equals cost price multiply again by that quantity. So we know how much technically the last two 25% are worth to us, if we break it down properly. And this is how an accountant will do it as well. I'm pretty sure you've got these basic setups that most people will use. There are other ways to do it, but this is your common way. Now here, price. So let's work out the value. So here we worked out that P5, if you want to look up here in column P and row 5, that's that price. If we adjust this, if we drag this down, we should get that a value that we were trying to reach over here. So then that's the value, and then we've got the ability now to work out the profit and loss. And again, you can just drag that down and it should automatically work out the value. And if it doesn't, what we do it ourselves. Equals, I know why, because let's just delete that. All right, we will get the answers. We'll get there in a second. So once you've set your spreadsheet up though, it's all pretty straightforward and automated. But in this case here, we want to work out what we're going to get after the fees, and this is where CoinSpot will give you that data already. In this case, it's obviously going to be $30 less, and then in this case it's going to be $55 less, so it'll be 5,500 will be your final return after your fees. Again, we can make that all dollars by clicking the dollar sign on Excel. If you haven't got Excel, you can go out to JB Hi-Fi even, just to your shop and get yourself a student version of the Microsoft softwares, where you can get Excel and Word. And then what this does is, because Excel is great, there are imitations on the Mac and so forth, but they don't have such good features, I find, as Excel. Now here, profit and loss, we're working out what those next 25% of our capital investment is going to give us as a return. So you can see that as we hit higher price targets, we're getting a lot more returns. This is why people want to go for the bigger play, is they skip all these take profits 1, 2 and 3. They're not taking profits along the way, because in a way they're sort of getting greedy, looking for the big play. But it's not uncommon, it does happen in crypto. So even if you put a small portion of your portfolio into the never sell bag, or look at the 5-10 year play, which is your long play, then at least you've got opportunity to be exposed to the bigger returns. But you know, realistically, we live in a day-to-day life that requires to sort of sometimes close positions and need a bit of money. So this is where you'd be wanting to capitalize. Obviously, if you put in more money, those percentages over here are going to be much bigger. So the more you expose yourself, the more exposure you have to risk and reward. So it goes both ways, both profit and loss. So only invest what you can afford to lose. Don't invest what you need day-to-day living, and don't sell your house to do it. Obviously be smart, segregate your finances. You know, you might have some for long-term investments, some for shorter term plays. You need to have your living finances, you need to have your day-to-day work expenses, you need to have your bills all covered. So that's all your logical thinking through you've got to do, and charts can help for that. In this case, we want to now work out what our tax would be. Again, we can just drag and hopefully it will fulfill. No, that doesn't look quite right. I'll just do it manually so that you can see how I do it. Again, we're going to work out this equals that multiplied by the time, where is that multiplication, times by 35%. Sorry, it shouldn't be multiply, it should be no, actually that's right, that is right. So it is, again, we'll just drag that there. You saw how I did it manually, and then that will show you, sorry, they just look too low, but it is correct. So 35% of $5,000 is $1,700.50 as a roundabout. So that's what portion you need to be putting. And this is my tip of the day when it comes to really being on top of it. Have a bank account that's just for this money. And every time you close a position and you're in profit and you've got to pay capital gains, put that money into that bank account. So come into the year, if you manage that bank account correctly, you can, it's a no-brainer. You just know exactly what you're going to need to send off to the ATO. And in this case here, you might find that you profit on this position, but on another position, you might be at a loss. And that means you could actually withdraw the money from that bank account when you get a loss. So you will continually keep that account at balance. That's a really good way to do it. Or you can treat it as a savings account. Once you put all that money away, if you get a loss at the end of the financial year, if the loss is worse than or it's a significant amount, obviously you can take back that loss and put that towards as a reward, or pay yourself, or whatever it is you want to do. Use it to spend it on something or buy more crypto, up to you. But that can be obviously explored as well. But just keeping it simple, put it all into one account, and work your way from there. Here, did we do a formula for this row? We did. Let's see if we get a nice, yep, beautiful. So this is what we'll end up walking away with. And to do this, I'm just going to drag over those positions and give myself a bit of space to put in the answer. I'm going to hit sum up the top here, and that gives me what my profit would be, a walkaway profit, and how much tax should be in my bank account. Should be this nearly $3,000, and for a clean take of $5,500. So this is a really good way to store your finances for crypto. And that way you now know, why did it just change the size? You know, if you need to drag, just find that highlight, boom, open it up, and you're good. All right, so from here, we get an overview. Now, we get to do this for every position that we have, every position with a date from every sale. Now, this was just an estimate on the take profits, but once you start actually executing your take profits, you then go and put the date in. And that should then lead to all the answers you need to fulfill this, and anyone can double check it if anyone ever has to do so. Now in here I just did a little bit of an additional part where this will come in handy next when I start showing you how you can buy and sell positions and add to your position. So, you know, after selling 500 of 1,000, I've got 500 tokens left, and then after selling the next 250, I've got 250 left, and then at the end I should end up with a zero balance if I'm closing all three take profits, and that means I no longer I'm out of my theta position completely. This is what I profited from, and you can change the color. Let's say green, we all like green, and then there's a little bit of red there because that's what we have to give away, unfortunately. And so that's what you're giving to the tax, and that's what you've taken home, and hopefully you can then enjoy that money, whether it be saving up, holidays, spending it, more crypto, whatever it is you do, invest in, you know, land, food forests, whatever. Now, this is one example, but how do you do it on many trades and so on? Well, this is where I'll just go a little bit more above the standard, and then we'll finish it there. But so that's your standard outlay, and that's the simple version. But what happens if you start buying more? You know, you buy another 1,000, you start changing your plan, or you start buying 100 every week, then it starts getting really confusing. So when they say dollar cost average, yeah, that's going to be a nightmare for accounting. I like to work with whole numbers and just do them, you know, have a few smaller, less purchasing rather than doing a lot of purchasing, buying a little bit here, a little bit there. That can get really annoying for your accounting. So, you know, you might then end up buying another 1,000 of them, or, you know, then later on another 10,000 when you profit from another position. And then you start building up. And that's where you're going to get a little bit confused as to when you're selling a position, where did that initially come from? Was it from the first 1,000 that you acquired, or is it from the next bracket of 1,000 that you acquired? So it can get really messy. So keep it all centralized to one exchange if you can. So, you know, CoinSpot, keep it simple. You might have one or two other exchanges that you trade on, but, you know, be able to do the maths for each exchange it's the best way to go. You know, traders like myself will have a lot of exchanges and wallets, and it gets really messy, you know, and that's really hard to do, and it takes a lot of time. So instead of to save yourself those many days and weeks of accounting, keep it simple and straightforward. Now in this case, let's say I bought 1,000 and I didn't set my take profits. I would be doing I'd do the same thing here, except all I would do is update my price. So I'll keep that there for reference, but let's say I sold a position, I haven't got my plan in place. So this is my capital plan, how much I want to sell off each time, and this is my take profit, which will relate to the capital. So TP1 relates to my first position of capital closure, TP2 is the next position, and so on. So that's self-explainable. But in this case, if I was to go, all right, well, I don't have that plan in place, I'm new to crypto, seems like it went up 3x, so I'm going to say today, 20th of September 21, I sold, let's say 500 just for the simplicity of it, at a price of $6. Okay, so $6 was my closing price. I sold 500 of them. My initial means I can work out my initial cost, which was equals 500 tokens multiplied by the initial cost of $2.20 equals. So it cost me still $1,010. That will never change. So your initial costs will never change, because once you've made that purchase, it's locked in. What's going to change is obviously the value of the transaction, and then the details up here. So instead of me going in and doing it all again, what I'll do, I'll just change this to $6 and the rest should all flow on from there if this was done with formulas. So I'll just double check that. So after checking, I can just show you how to update this. What we're going to do is make sure it's really a good lesson as to why sums are more important than manual entries, because manual entries take too much time. So what we'll have to just adjust this. So I did this manually, but what you want to do is hit equals the value that you sold minus the 1% coin spot fee. That'll give you your actual, after the fees are deducted, value. That didn't quite do it. Q5. Yeah, it should have done it, but 1% is more than 1 cent, so it's not acknowledging. This is where Excel can be a little bit annoying. Okay, so I've adjusted that formula in here. It's a more lengthy formula, so it will become Q equals Q5, which is the value, minus, and in brackets, Q5 again, the value multiplied by 0.01, which is 1% in the maths world, and then close the bracket. See up here, just copy that there, equals Q5, and just obviously click on the cell. You don't have to type it in, but in this case, we'll come up with a number of $1,999.80. So once we adjust that to a formula, the rest will follow. All right, so it'll be slightly different. That's why you can see when numbers change. You've really got to be on top of one little different thing in the formula can change everything. So using your CoinSpot spreadsheet in your top right corner where you do your drop down will give you these final figures after fees and so on. And that way it's easier for you to enter into the system. But I like to do everything through sums so that it does the maths for you. So if you change one thing, if I change that to $6, I should see a difference. And then if I change that to $20, you know, you'll see differences. So it's good to have everything as a sum and then remember to save it so you don't lose it. But I'm just going to undo those figures there. I will redo that $6 one. Actually, what I'll do, I'll just show you that again. So on the $4 one, we've updated the fee. So no matter what, if I change the price there, all these numbers are going to end up changing. So if I sold out only at $10, if I sold out at $20, and then I sold out at $30, these are the new figures. So it's all self-explanable from there. If not, rewind, watch the video. See Excel just there, just got to undo, and then you go back to your original figures. Remember to hit save if you're doing, I actually haven't done it yet, but when you save it, it's worth doing it in an Excel format that will save the colors as well, in case that's something that you find helpful, is saving colors. But yeah, so back here, I mean, if you'd adjust it, I'm just looking at it going, okay, well, what about if I just adjust these dates and adjust these amounts? Having a plan makes it really straightforward, but if not, then you're going to freestyle it, and whatever figures you get will give you the value. Same thing, use the formulas and enter your positions. You can also see how you're going and what you've got left. So that's what I want to do now to continue on. So theta, we bought 1,000 on this date at that price. Skip our plan for a second. We sold some, 500 of them at $6. Our initial cost price is still the same, but now our value is different. So we're going to go equals the price we sold at multiplied by the quantity that we sold, and that will give you, I'll just open that up, it'll give you $3,000. So your initial investment was $1,010. Today you've closed it at $3,000, so we want to do the rest. We want to work out the after the fees component, which equals that amount minus, in brackets, and we'll use that cell again. So the final amount minus, we did a multiplication of 0.01, which equals 1%. Close that bracket, and you should have the $30 deducted from the amount. So that's what we'll get into our account. Because if you put that full amount in, that means you haven't factored in the fees that you've paid. So you'll be paying tax on the $30 that you actually should be deducting because of the fees component. Then we do equals that final amount we received minus the initial cost equals, and then we work out our tax. Same thing, we can just copy and paste the formula, which is S5. So we go equals, in this case it's S10 multiplied by 35%, and there you go. You've got, no, that's the wrong formula, times 35%. Cool. So our total tax would be $686, and then we can work out what we profited from there, which means equals profit and loss minus our tax amount, and we've got $1,200.74. Sorry, and 74 cents. Cool. So that's how you do that. But now what we want to do, I like to add in an extra layer where we write down, again, we've got how many we've got remaining. If you were to have bought more theta, you'd have to put another line in here and then update your remaining. So for every transaction, you want to update your remaining so you can stay on top of the story. But the truth is, not all of us just have one token, right? We want to have a few positions. So what I do is I'll make a position for every token. So let's call this one's going to be the theta zone. And then over here, I might start a new token of hollow and then do all these calculations for that. And then from there, I would then make another room for another token. Let's call it link for chain link, and so on. And so that way you get a visual, and you should know, basically by adding this calculation up, you should know how much you owe. Get rid of obviously your sums there and just drag them down to the bottom. So do all your sums, and make sure you update all your remaining positions. So that's, hopefully that gives everybody a good understanding on how to track it. You'll have a big spreadsheet that you save. You don't have to title it anything, but you might want to title that something and then copy all of those transactions and start a new sheet by hitting the plus sign. And this could be a new way to do it, or a second, might have a new idea to how to add in new columns, but you don't want to change the first one. So idea 2, and this one might be accounting 1 and accounting 2. So yeah, so you have different ways of doing it, and just play around with what you want to add in. Now there's more advanced ways, like I was saying, that I can do, but in this case it's just pretty straightforward, and it's the overall. Then from there you'll have your final data, what you want to give to your accountant, and they can enter it. They can either do the complex way or the simplified version, but speak to them because they're obviously who you need to get the answers from. Cool guys, well, happy investing, happy recording. I know it was a long one, but hopefully it's going to give you the insights that you need to stay on top of your accounts, no matter where you are in the world. I guess just got to adjust your tax percentages based on where you are. I know in Portugal they have no capital gains tax on crypto, so that would be 0, and you'd be able to basically cut out this whole column here, which means your profit will be the full amount of your cost. Your final amount minus your initial cost. So you get rid of that, and this would be higher. So there you go, guys. Happy investing, and we'll see you all in the next video. Do me a favor, smash like and subscribe and share. Take care.